and take a look at how the markets are performing on this day. The local exchange was in a cheerful mood yesterday, and this is tracking the rise in U.S. markets even as investors await decisions from key central banks, and this amid concerns about elevated inflation. Global focus will be on the U.S. Federal Reserve policy announcement later on today, while locally the municipal election vote tallying is still underway. Joining us is Petri Redelinghuys, trader and the founder of Herenya Capital Advisors. Mr. Redelinghuys, a very good afternoon to you. Perhaps let's start with you giving us a sense of how the markets have been performing so far today. Have the local election results that we are seeing coming through so far had any bearing on investor sentiment?
Good afternoon. Thank you for having me. I'm not really sure that the local election results have had much impact on our market, to be quite honest. I mean, the rand's quite a bit stronger today, which is, I think, what you would expect from a peaceful election kind of scenario, but not really so much so that you could say that it is because of the election. I think that obviously markets are watching the election to some extent when it comes to the final result, but for the most part, there were some fears around, do we see unrest, do we see some sort of a situation unfold similar to what happened in Durban over the election weekend, which obviously did not happen. So far so good, right? Things are relatively positive. So I think it's almost as if the market is overlooking this. I think we can debate a little bit around what the outcome of the election is going to do, what the impact that's going to have on investor sentiment. I think if we get, say, for example, a Action SA DA coalition to run Joburg or Gauteng, I think that would be very positive. I think that would create a lot of positive sentiment for businesses in the area at least. But overall, in the macro picture, I think our market and most global markets really are just more focused on what the Federal Reserve Bank is going to do. And also there's an OPEC Plus meeting later this week. So the major themes, I think, of the market right now are energy. So oil prices and oil production is something that's something we should watch quite keenly. And then also, monetary stimulus that we've been having in the U.S. for such a long time. Now we're starting to see some evidence that perhaps there is a argument to be made for transitory inflation. We're starting to see the Baltic Dry Index come down. We're starting to see the availability of trucks in the U.S. starting to rise. So some of those supply chain constraints that have been putting upward pressure on prices are starting to dissipate. So this could give a little bit of breathing room, I guess, for the Fed to potentially delay tapering or potentially push out interest rate hikes in future. So that is something that we're going to be looking for this afternoon. However, at this stage, most of the market is expecting for tapering to start now in November to the tune of around $15 billion a month, and then to run obviously all the way until completion, with the first interest rate hike in the U.S. expected around July 2022. So I guess we'll see what the guidance is from that. Anything that is, I guess, more dovish than that, or not quite as tight as that schedule, would be considered relatively positive, I guess. And we might see the Fed use some of the emerging data that's been coming out as basically justification as to why they can continue to use stimulus for longer, which would obviously be very good for equity prices. So I think that's probably the biggest theme in the market, and I think whatever happens there is probably going to be a bigger force in our market than the outcome of the local municipal election. Although, obviously, the local municipal elections went relatively well, although voter turnout was somewhat poor.
And talking about that, Petri, let's look at those, for a moment. The focus is still very much on the results. Businesses have previously raised concerns about governance and issues of service delivery at municipal level. What exactly is business looking at when it comes to these results?
Well, I think you've hit the nail on the head there, right? Service delivery has been deteriorating somewhat over the last couple of years. So I think businesses, particularly small businesses or businesses of any size really, want reliability in service delivery. As a business owner myself, you want to be able to know that the electricity is going to be around. You want to know that the quality of the roads are good. So all that service delivery stuff is really very important. And this is why I think that, from a SME perspective, I think one of the things that could be really beneficial is if there were a coalition between, I want to call them the two opposing parties versus the ANC. So, between the DA, the EFF, and Action SA, there's enough there to make a solid majority if there were to be some sort of a coalition between those parties, and that could potentially take the ANC out of the governing seat in the Gauteng, for example. That I think would be very positive. I think so. What we've seen so far is that throughout the country, really, even though potentially the opposition isn't really gaining much ground, the current ruling party is losing a lot of ground. And that is, I think, as people are becoming more frustrated with lack of service delivery and are, looking to make a change.
Let's take a look. Let's take a look, Petri, at some company news just very briefly in the limited time that we have. Dis-Chem Pharmacies, now they've released their interim financial results for the 6 months ended 31st of August 2021. In a minute, how did they fare?
They did pretty well, actually. So Dis-Chem, I just want to pull up the numbers here, did a revenue of around 14.9 billion, which is up 16.6% for the same 6-month period compared to last year. Most impressively, I think, and this is, I think, what the market is probably most excited about, is that they are once again declaring a dividend, this time of 19.5 cents per share. So it seems that they are back on track. I mean, earnings are up by around 34 to 35%. Headline earnings per share, in fact, up 35.3%. So obviously there was some time that they were out of business during the 2020 year because, lockdown had wreaked a lot of havoc. And then also earlier this year there was the civil unrest. However, they do say that their insurance has managed to cover most of the losses that they took there, or most of the sort of damage to their property and assets. There was obviously some turnover revenue loss, but even with that, they've managed to grow revenue by some 16% and sort of earnings and headline earnings per share by 34 and 35% respectively. So a very solid set of results, and the share price doing pretty well is also 4.5% up so far on the day.
So the Mr. Price Group released a trading statement for the 6 months ended 2nd October 2021 earlier on this morning. How have they fared?
They did okay, I guess, a bit not as good as Dis-Chem, right? So they've obviously been affected by all the same things as what Dis-Chem has been affected by. However, their earnings per share is likely to be sort of 30 to 40% higher compared to the previous period between 4 April and 26 September, which sounds really great. But, the market, well, I guess the market also relatively excited about it. The share price is up some 2.6%. So they've done okay coming off a low base. What is interesting, though, is they've had, obviously, to put through a number of write-downs. Now, this increase in their headline earnings per share, the current sort of reported period is going to be somewhere between 421 cents and 450 cents a share compared to the previous period of 290 cents a share. So that is, on the basic headline earnings or the basic earnings per share measure, 45 to 55% higher, which is fantastic, right? Now, this excludes the insurance payment that they received. They did receive 181 million rand insurance payment from Sasria, obviously to cover some of the losses that they took in during the KZN civil unrest. It's a nice way of saying it, which obviously affected quite a few of their stores. Something like 111 of their stores were damaged, and there was a huge amount of write-downs and stuff that they had to do there. So stock was stolen, cash, assets, that kind of stuff, right? So these results actually include those write-downs, and then the insurance payment that makes up for those write-downs has only come in after the reporting period. So those will only be reflected in the next reporting period. So they've actually done really, really well. They haven't mentioned anything here about, I mean, this is obviously not the final result. This is just a trading update or a trading statement. But so far, so good. It seems as though the retailers are busy recovering. And I think this is something that we've seen as something that I think we've spoken about as well. Comparing the last couple of years have been so wild, we really sort of have to compare this year to 2 years ago to get an accurate picture. And it seems that most of these companies are starting to recover, and that road to recovery is accelerating, which is encouraging.
Petri Redelinghuys, thank you once again for today's market update.